So the app I use for making the video limits me on how much time I need to make the video. So to avoid any other thing, to avoid the deleting and whatever, I make them short so that I don't lose any, or I don't repeat what I've already done. So in the previous video, we were going to look at the example. So during the year, Skida introduced, they're telling us that she had this information. Still during the year, she introduced 10,000 as capital in the business and made a withdrawal of 6,000. So how do we prepare our statement of affairs? Statement of affairs. Let me see. I would prefer that. Anyway, we shall see how to do it. In most cases, what is done when they are preparing statement of affairs, they make it in a vertical form. You see, this is in a horizontal form. Vertical means that we begin with assets and less liabilities. So that means if you are going to use the vertical, we shall come, put our heading, then we make our table of two columns, whereby the first column is for details, the second column is for maybe 3 columns. First for details, second for shillings, third for shillings. So we shall have assets first, we have assets, then later we have liabilities. Okay, so in this case, that means I'm explaining this video assuming that you also, when you're listening to this video, you have your paper and you're listing down what I'm talking about. So get your book, which you're going to make your revision from, draw a table of 3 columns. The first table is for details, the second table is for shillings, or you use whatever, whether rupees or shillings. 2 columns are for the shillings. Then we begin with assets. We list our assets. Okay? Remember, the statement of affairs we are beginning with in this case is for the beginning of the year. Skida's, let me show you my arrow. Skida's statement of affairs as at 31st March 2005. So that means we shall consider information only for the beginning of the year. That means we all know what assets are and what liabilities are. We must differentiate them. I'll find some people writing under assets, putting their creditors. But are creditors assets? I leave that question for you. So in your paper, write assets. Under assets, you write debtors. You go to the next column, write the amount, which is 16,000. You put stock, figure 12,000, furniture 2,000, cash in hand. This you add and get 31,000. And this 31,000, put it in the third column. Then you go on to liabilities. We have creditors. This. Then this is capital. Capital is also credited, but anyway, let's use this method because this method has the debit side and the credit side. So when you are preparing the statement of affairs, your assets appear on the credit side. Reason, you already in your debtors account book, you have recorded your debtors on the debit side. So in this statement of affairs, you record it on this side, which is 16,000. So when you add up this side, it is 31,000. You add up this side, it is not, because here we have only creditors. Is that clear for some of you? It might not be. So let's continue with the method I was telling you to use. You have your table. We had already finished putting assets. Then we went to liabilities. Under liabilities, we put our creditors, because creditors are the only liabilities. Creditors of 1,200. Then those are the only ones. So when we are done, we get the total, because this total, we put it in the third column. When we are done, we less from 31,000, we less there 1,200. And what we get, the balancing figure, what we get when we get 31,000 minus this, is what we call our net worth at the beginning of the year. I hope that is clear. When I get 31,000 minus 1,200 in my table, not this table which we have in our notes, because I realize some of you are going to get confused. So that's why I said let's use our table. So when we this, we get the difference, and that means the difference we shall get shall be this, but in our own format. So that I want you to practice on this second part. In this case, we are doing a statement of affairs for end of year, 31st March 2006. The difference is on years. Mind about that. Okay. So when we are done with that, you remember they talked about, I want you to look at this. During the year, Skida introduced capital of how much? 10,000, and made a withdrawal of 6,000. It did not appear in this because this was at the beginning of the year. But in this, they will appear. Why? Because it is at the end of the year. We consider everything that is going to take place. But how is it going to appear? Because right now in this information, we are not seeing it. We are only seeing debtors, stock, furniture, cash in hand. We are seeing creditors, bank overdraft. And now you might ask me, where is the capital you're talking about? I'm saying it is going to appear in the statement that is going to come out of this information. So we shall go and prepare a statement to show our profit. Remember, the reason why we are preparing the statement of affairs is to enable us calculate the profit. And we cannot have the profit from single entries if we do not first prepare this statement of affairs. So in this case, we have our statement of profit or income statement. It is a short one because the information we have is very short. So how do we prepare it? You know how we prepare the statement of profit. Do we know, or I'm simply assuming? But we come with our capital at the end, 31st March 2006, which we calculated, and it is here, 35,700. After calculating that, we add the drawings made during the year of 6,000 and get 41,700. Then we less the capital that was introduced of 10,000. We less it because capital is not supposed to be included in profit. You might ask me, why are you adding drawings? If you go back to your accounting equation, you will know that when drawings are made, when you make drawings, you're reducing your profit because you, the owner, is the one who is going to enjoy the profit. So when you make a drawing, you reduce your profits. So if you are showing the profits that we have made, we include it because it is part of the profits but which you took before time. So we less further capital introduced of 10,000 and get 31,700. Then we go on and less capital in the beginning. Our aim is to make sure that we come out with the profit that we have made. So the capital in the beginning, we had calculated it was 29,800. When we less it, we finally remain with 1,900, which is the profit that was made during the year at 31st March 2006. That was illustration number 1. Illustration number 2, let us see. Does it have some different things from what we know? Because I don't want someone who is lazy. If you know you're lazy, then I don't know what word I should say, but this question will not work for you. And the problem now, you're alone at home. But thank God you're going to report back to campus. You will have students to be with. Some of you, I always ask you whether you discuss. You tell me you do, but I know you don't. So it is time for you to discuss. I'll be seeing from the questions you'll be asking me. I'll always wait for you to ask me questions so that I'm able to see whether you are understanding or not. Because we have learned that we don't only need to ask because the lecture is in front of us, but we can ask whether you're there or not through electronic ways. So there is this example. They're saying that CSI, who maintains his books by single entry system, has submitted returns to the income tax authorities showing his income to be as follows. So this is his income. 1999, 90, 91, etc. But the Income Tax Authority is not satisfied as to the accuracy of the accounts submitted. You are asked to help in finding their accuracy. In this regard, you are given with the following information. So he showed his income for these years of this March, but the URA of then was not satisfied with the information. So what they did, they said, you help him, help the authority and the businessman to know how accurate the information is. So what do? They are saying, number one, business assets and liabilities as on 31st December 1998, at the end of 1998. Do you see 1998 anywhere? No. So we shall see why they are bringing in 1998. Where debtors, this cash at bank, this stock, this at market price, which is 25% above cost. Creditors, this owner also owed his sister 2,000 on 31st December. On 15th March 1991, he repaid this amount, and on 1st April 1994, he lent his sister this much. Do you see what is happening? His sister. How does his sister come into the business? We are going to see. Sai owns a house which he bought in 1984 for 10,000 and a car which he bought in 1994 this much. 1993 he bought 5,000 shares in X Limited for this much. In 1994, 1,500 were stolen from his house. Mr. Sai stated that his living expenses have been 1,500, 2,000, etc. during the years, these ones and these respectively. These expenses are exclusive of the amount stolen. On 31st December 1994, the business liabilities and assets were creditors 4,200, debtors this, cash in hand this, and stock this at market price, which shows as gross profit of 25%. From the information submitted, prepare a statement showing whether or not the income declared by Sai is accurate. So how do we prepare it? Simply by beginning with the statement of affairs. We began with a simple example, now things are changing. So statement of affairs as on 31st December 1994. Okay. In this case, how many years do we have? We have 1, 2, 3, 4, 5, 6. Then this is 94, 98. We are going to prepare statement of affairs for only 94 and 98. For only 1 year, because they are saying that we use this information which is here, this one, to be able to determine what is shown here is accurate. How do you say it? Is the language I'm speaking clear to you? Statement of affairs, we are looking for profit. But how do we get profit using the statement of affairs? We get our assets and less our liabilities. How do we get our assets? From the information given to us. Isn't this the information given to us? They're giving us business assets and liabilities as on this day, 31st December 1998, where these are debtors. These are debtors, so we put them under assets. This one under assets, stock under assets, creditors under liabilities. So if you're preparing for only 1998, you're done. You simply get your assets, which have earmarked. I've said debtors are assets, cash is an asset, stock is an asset, then creditors is a liability. Use your calculator, less that. We go to this. They're saying that Sai owed his sister 2,000 on 31st December 1988. On 15th March 1991, he repaid this amount, and on does really his sister have anything to do with the business? Does he? I think this one would work for us. For 735, I would want us to use this additional information first. You get your book, make a table, like we said, of 3 columns. Details, we begin with assets. Under assets, we have data 725. We go to cash at bank 4735. We go to stock 2710. They're saying at market price, which is 25% above cost. You get what it here? They're saying 2710. So 25%. Of course, I don't have a calculator with me here, but you calculate using 25%. So when you calculate using 25%, they're telling you the reason why they say there is an increase of this percentage. Let it not confuse us. They're saying that the stock at the end of that year, the stock had increased in value. Maybe they bought the stock at this much, but it had increased in value by 25%. So when you're ending the year, you value the stock at the market price that is prevailing then. So you have to calculate what is the 25% of this, then you add this. I hope that is clear. Okay, so when you add, that's why when we come here, we realize it is, where is 98? What's this one? This is 94. 337. They calculated it from here. I need to find words so that I'm able to explain for you well. Anyway, but the reason why we calculate that we are using 1998, they're saying that stock is 2710, but it increased by 25%. There is this error. I want you to correct the error. Not 20% by 25%. So you get 25% of this and get the profit. Okay? On stock, not the overall. Then you go to your creditors. So I think there were errors on the years that were used. So we need to sort our years. I will have to go back into the question and correct those years because the information is not going hand in hand with the years. Clear? So that I will correct, then we get to see what we are supposed to do. Then when you have finished the statement of affairs, you see how the video is moving. Assuming you are reading using these notes, it would be so confusing. But if you are listening to the video while you have your notes in your hands and you're correcting, it becomes simpler. When the video is too quick for you, you just pause and first read your notes. Because your notes are with you, so they guide you very well. That's why I insisted on printing out. Not that I want you to spend. I don't enjoy when you're spending, but when you spend on the right thing, then I have no problem. We remember the question was asking us to prepare a statement of profit from 1st January 1989 to 31st December 1994. This is the statement. They are showing capital as at 1994. They're showing living expenses, which were shown in our additional information. They're showing this capital as a statement of affairs. But I don't want us to spend much time on this because this is not much of what we are going to study. My major focus was on understanding how to prepare a statement of affairs. We have known that the statement of affairs is the difference between assets and liabilities. So this you can practice it in your own time. Okay, let me see what time we have used.